The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 11th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary afternoon, evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. We're going to go take a look at the circumstances that the buyers and the sellers, the bulls and the bears are throwing at the market right now. And I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone. Dial on it at 877-927-6648. Internationally, you can call us at 727-445-1044. This is terrific Tuesday, sometimes turnaround Tuesday, turnaround from yesterday's move higher. We talked about that. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading off 256 points. She's trading at 17,359. S&P is up off 27 points at 2,077. NASDAQ Composite down 76 at 5,025. Russell is off 13 points. The DAX finished down 311 points. The FTSE off 72. Gold's up about $5, trading at 1108.90. Silver's flat, down 2 pennies at 1527. Light sweet crude down $1.88, trade at 43.09. Google's a big mover to the upside, up $24. You've got ICU Medical or something like that. That's up 18%, $18. Shenandoah Telecommunications up 20%, up $7. We've got to the downside, Zebra Technologies creating a huge island reversal top out there. We'll take a look at that. Priceline's off $20. World Acceptance Corp, not very accepting, down 36%, off $18 and change out here. Red Robin Gourmet Burgers, looks like they're serving them rare today, down 11%, off $9.60. Okay, so where do we begin? Well, let's begin almost really where we left off yesterday. But first, let's go peek in. Remember, it's always important to understand the type of market that we have, the market conditions. That's the copper chart. We'll go back to that perhaps if you remind me a little bit later. But let's just go check in, and let's do this with the S&P 500 here. And as we put up the S&P 500, yesterday I showed this chart, only I did it as a line chart, which meant we were just taking a look at the closes of the candle session. Now, this is a quarterly chart out here. And what you can see over the course of the last 3 quarters, the last 2 were in the third one, because it's calendar quarters, right? So we just began July. So we're halfway through, I guess, July and August. You can see sideways move out here, right? Small-bodied candles, little doji actually for the quarter that ended June 30th out there. Tells you that the market is tired. But the more important thing is to just see the flat line, because we have been trading for basically 10 months in a flat line mode out here. And that means there's not, and as we talked about yesterday, with the market moving to the upside, and that's what we're going to switch over to. I said, look, bulls cannot get too excited, nor can bears to the downside. We must always remember what type of market that we are trading in. And if we go take a look at where we left off yesterday, that's assuming I can find it. Good Lord, there it is, right here. Remember when the market was moving higher? So we'll take us right back to where we were at about 1 o'clock in the afternoon, 12:01. You're right here, a little doji candle out there. It was right there, yeah. And what we were taking a look at, the bottom portion of my chart out here. We're taking a look at the directional movement index. And we were noticing I was pointing out to you, how we had gotten above the 40 level. Strong move, but not the place where you really want to be adding to your trades out there. We went further back on the chart out here, and we took a look at the last time that we saw a significant change in trend. That's when the market had pushed higher into the August 5th time frame out there. Now, when it gets above, not they, but when this indicator gets above that 40 level, what you really want to be watching for, and what I suggested to you, is look for that first tick to the downside. If you take a look, let me do this here. Let me turn off a couple of things, then you can actually pay attention to the, get rid of that. You can pay attention to my data box. There we go. So as we take a look at the data box over here, and as I go through each tick, we can see, so from 1 o'clock, let me get to the 1 o'clock time frame. There we go. 1 o'clock. It's a 30-minute chart, by the way, we're looking at. 46.57 goes up to 48, goes up to 49, goes up to 51, goes up to 53, goes up next to 53.50, 54.09, still rising, 54.73, still rising, 55.33 still rising, 56.03 still rising, and 56.45 even still rising right there. That's at 6:30 in the evening, and 56.60 even still rising then, and that's at 7 p.m. And then all of a sudden 56.86 again still rising, and I know we're going to get there soon. 56.58 right here at the time period of 8:30 in the evening was the first time that we saw the first tick to the downside. Now, if you use that indicator, and remember, we were also looking at the 2099.25 level as being very key. Now, on that 30-minute chart, the first time we saw a tick to the downside, price closed at 2099.75. The very next tick, you saw that directional movement indicator tick down again, and the close 2099. There was your signal. Remember, now, how far was the market going to fall? It told you that trend was over, and I made a very big deal about this 2099.25 level. And in fact, there's a number of different tools and indicators that we can use that all seem to be coming up to approximately the same area. Significant level of resistance. Remember, yesterday we talked about how the market moving up by a couple hundred points. Don't get too excited. It also gave you the areas to say, look, that's not where you would actually go ahead and jump on board. Now, when we take a look at where we're at inside the markets, let's go back and take a look at our retracements out here. That's the first place that you and I want to start. We're going to go all the way down from the bottom out here at about 1 o'clock in the afternoon on August the 7th, and all the way to the high that was put in. I've actually turned that off. Let me go ahead and we'll just make that white for the moment. Right up there at that high, you can see we're really right now down around a potential level of support, 2070.50. And the actual intra-session price during this 30-minute bar that we're in right now has been 2071.50. If this level fails, what you should anticipate and expect is a move down to the 2062 area, making a 100% move of a move. That's one pattern. What else do we have that's completing at this area right now? Let's go take a look at a potential A to B equals CD to the downside out here. Again, it's a 30-minute chart that we're looking at. Here's our A to B equals CD tool. We can see we're below the 1 to 1.618. And we have not seen, we did see one bullish reversal signal as price got down towards that 1 to 1.618 level. That was right here, and that first bullish candle took place at about the between 12 and 12:30. But if I go ahead and I turn off, let me turn this off here for a moment, ABCD tool, and you can see that on the very next trading session out here, you did not get any follow through. And that's really what you like to see. You like to see it in a chart, you like to see it in life, and anything that you do, you like to be able to see follow through. There was no follow through. In fact, if you go ahead and blend those two candles together, you know, you do like a DQ blizzard out there. Not sure where that came from, but as long as you go ahead and blend the last two candles, the candle you're in and the candle before, that will also give you a ton of information out here. So now what we know is that prices come back to a retracement level. We're going to go take a look at volumes and so forth, but prices come back inside the ES Mini to an area where it should be able to find some support. Now, let's go see if there's any other support down here. Let's go put our TAS market profiles on here. And as we take a look at the weekly, let me see if I can turn on if there's anything out here on a daily that's worth looking at. Probably not. No, that's up there. So it's really there is no significant support out here. And I'm looking at weekly and daily profiles. So it's really important that the ES Mini holds the area that it's in right now and gets back above 2075. If it doesn't, that says it really fails and comes back and it tests the bottom of our weekly box at 2060. Now, it doesn't have to get to 2060 exactly. You can get back into that level from the trading session on August 7th at about 1 o'clock, which is just slightly above that area. So that's what's going on inside of the ES Mini. And that's just simply taking a look at that indicator that you and I looked at yesterday, we're towards the end of the show, towards the middle of the show yesterday, that we used that said, hey, not now, not now. Wait to see what happens on the first retracement out here. And you're seeing what has taken place as we speak right now. Something for the Bulls on one day, something for the Bears on the next day. What's it going to be tomorrow? Well, look, I can tell you this much. If the market were to finish here right now, what you and I can look at is the VIX index. And if we go take a look at the VIX index, this has had a one-day rate of change so far of 16.4%. It's up $2 and a penny out here. It's right now trading out 14.24, so we can see it's up at 16% to the upside. Now, is that a good thing? If it closes right here and you are short the markets, and we know we've been trading these markets, that gives something for the Bulls and something for the Bears. I would suggest to you that the something for the Bulls will take place within the next 24 to 48 hours, more likely the former rather than the latter out there. However, the VIX has to finish in this range. It can finish below 1424. I'd have to do the mathematical calculation out here. It's probably around 14, 18, something like that. I won't do it. Not that I won't do it, but I'm not going to do it right now during the show out here. But if it finishes like this or worse, the chances of a bounce are like 90%, bounce or bottom out here. So that's what and if we take a look at the VIX here, you can see it's trading above the 50-day exponential moving average. That happens to be priced at 1382. You're at 1423. Likewise, if the market does not sell off at the end of the day, there's some kind of give back, and you see the VIX close below 1382, you'll have another rejection of the 50-day exponential moving average. What does that mean? It still means there's plenty of liquidity inside the market out here. That's what Stevie likes to use that 50-day exponential moving average for, inside of the volatility index. There's not too many that use it that way, but boy, if you do, you'll find this as a trading advantage tool for you. If we go take a look at what's going on inside the market breadth by taking a look at the summation index, you're going to see that the New York Stock Exchange just slightly, the price oscillator just slightly below the zero level. And I do mean just slightly, just by a few net declining issues out here. So if this thing closes back above zero, net declining issues as we speak right now, let me see here. Let me put that up on the screen. Give me a moment. We've got, should be, it's like right in front of me, minus 1264. Excuse me for a moment while I turn to my other spreadsheet out here. 1083 is the number. Anything 1080, actually 1082 or less, and you will see that price oscillator close above the zero line. But let's go back and take a look at the summation index out here. And let's look at it for the other two counterparts. Well, we'll do that when we get back from this breakout here. We'll go take a look at the NASDAQ composite. We'll go look at the Dow. Look at that Dow traveling right down into support. Support of a descending price channel. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 250, S&P down 26. Before we went to that break, we were taking a look at the Dow. We're looking at really the summation index price oscillators for the New York Stock Exchange left-hand panel. Dead center square is the NASDAQ composite, and off to the right-hand side is the Dow. We're going to take a look at the Dow as we speak right now. We can see that it's trading back into that hammer candle from August the 7th out there. Now, that low on that hammer candle, which is 17,279.08, it is very important. We have seen two hammer candles so far fail to the downside inside of the Dow. The first one was from July 6th. The second one was the following day on July the 7th. There is a third hammer candle that has shown up, and that was on Friday of last week on August the 7th. So that is a very important low. We can also see the bottom of this descending price channels where price has moved into. We can see the price oscillator on the lower panel of my screen. It's got a little bit of a higher low out there. No bullish reversal signal or anything like that, obviously, on the daily chart. But what you and I can go do is take a look at a shorter term chart out here. So let's go look at the futures contract. We're going to specifically focus on the Dow right now. Let's go take a look at the futures contract, the 30-minute time frame for the Dow futures. And you can see that the last time that the Dow made a significant bottom was right back here at about 1:30 in the afternoon. It was just simply waiting for the Trader's Edge show to start. Thank you very much. And that was on August the 7th. And what we can see that was occurring back there is we can see that price was moving lower with less relative weakness. And it is the same pattern that is in play as we speak right now. Now, the very first time that this pattern on today's action, let me just kind of explode this up just a bit. It's one of my favorite trading patterns. Should be one of your favorites as well, because what because the market is like the dealer in Las Vegas. In other words, it has to show its cards if you're playing. Well, I don't know. Does the dealer show both cards in blackjack? No. Would you like the dealer to show both cards in blackjack? Probably the answer is yes out there. Of course, somebody's going to write me and tell me that I don't know anything about blackjack. I would have to say you're right about that, but sit down at a Texas Hold'em table with me and let's play that game out here. But with regard, let's get back to this chart. Here, the cards are shown. And when price moves lower with less weakness out there, that's telling you that the move is extended. You can see a snapback. Now, this pattern can be completely null and void. And how does that happen? It starts moving down with some type of conviction. But that'll show itself on my chart as well. And the only way for this to actually reverse or give you some type of reversal signal out here is for the cavalry to arrive. And the way that they arrive is they arrive by painting a signal, some type of bullish reversal signal out here. So at this stage of the game, inside of the summation index, the price oscillator for the Dow, we know that it's in against the bottom of its descending price channel too. On a 30-minute chart out here, well, first time frame that you and I would take a look at to help us understand, is there any trouble in paradise out here? And the answer is, yeah, there's some trouble. Now, the first time that the bulls came in, they really just sent just a few troops out here, and that was at the 12:30 time frame. You can see that little bull sash candle. Remember, no follow through on the very next candle session always makes that suspect. So now what you've got, we're coming into the 1:30 time frame. At 2 p.m., there's always the possibility that we'll see a bullish. In fact, in the next 3 minutes, you could see the bulls push it up above 17,315, maybe to about the 17,320 area. 321, 322 in the next couple of minutes, and you'd see a hammer candle that would actually form. Now you wouldn't see a hammer candle. That wick is a bit too high out there. So it would really be not until the very next session that could possibly form itself out there and give us any kind of indication of some type of a bounce. Remember, the VIX, if the market finishes low, that does not bode well for the bears out there. If you are a bear, you actually want to see the market give back some of these gains before the close out there. I know that sounds counterintuitive, but and you don't have to trust me on it. All you have to do, if you're a subscriber of Mastering Probability, you know the odds of that pattern setup out there. So that's the and we do not have a similar pattern inside the Nasdaq, which is moving lower as well, and with some conviction. We'll go take a look at volumes and so forth. But as I update this chart out here, you're not going to see the same kind of pattern at the bottom that is forming in it. I believe we see one at the top. Yeah. So if you take a look at the top that took place yesterday, we had a 6 out of 7 waves to the upside. This took place at 6:30 last night. You saw that price relative strength divergent pattern. 8:30 was the time where we first saw that tick to the downside. It was at 9:30 when we saw that very first bearish engulfing candle that showed up inside of the NQ out here. It looks like we got a hammer candle that is forming right now inside the NQ with about what looks like, I don't know, 30 seconds to go or so. Well, now it's not a hammer candle, but we'll see what happens in the next 30 seconds. We will be back shortly. This is Steve Rhodes with TFNN. We'll go take a look at FCX for Danny in Atlanta. That means we're also going to go take a look at the Aussie dollar, because when you trade one, you're trading the other. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The S&P off about 25 points right now, and we're going to go take a look at FCX, Freeport-McMoRan. If you're watching this on Tiger TV, what you're looking at on my screen is the very top panel is the Australian dollar. And again, the blue, we're looking at a line chart here. We're going to switch to a couple of different charts out here. This way I can give you an idea as to what's going on really inside both the currency pair as well as FCX. And the reason that we want to pay attention to this is because this equity, Freeport-McMoRan, trades in concert. It's like it's a two-step tango out here. If you're trading Freeport-McMoRan, my contention is you're really trading the Australian dollar. That being said, that means you need to know what's going on inside of the Australian dollar. You can see the directional correlation that is inside this inside the currency pair, along with the equity out here. And so that means that what we've got to find in order for FCX to find a bottom, we've got to be able to find a bottom inside of the Aussie dollar. So this is the daily chart that we're looking at. We're going to switch over and take a look at a quarterly time frame chart here now for the Australian dollar. And the Australian dollar, this is, again, a quarterly chart that we have. That way it just becomes easy for you to see what we're looking at on my screen. And the Australian dollar has a level of support that should be arriving to a theater near you. Now, I don't think it's going to, that movie's going to start this week, but it could. It'll start when price gets down to 0.7094 2. Not to be exact or anything, but you want to write down on a piece of paper 0.70942. When the Australian dollar gets down to that level, it's going to be a convergence of two price levels of potential support out there. The first level is going to be nothing more than a 0.786 retracement. You and I looked at the 0.786 retracement inside of the ES Mini. It's a natural, normal place for price to stall. Now, when price moves down to that level, just like in the ES Mini, it's kind of like being on an elevator coming down from the top of the, from somewhere, some other floors above you to let some people off the elevator. Sometimes that happens to be the bottom floor, and it goes ahead and makes a U-turn. We'll know if it's a bottom. We'll know if it's a bottom floor inside, for example, the ES Mini, if there's a bullish reversal signal. Otherwise, there's more floors to go to the downside. Well, the same pattern really is in place here for the Australian dollar. If it just lets people off at 70 cents out there, 0.70942, it'll go all the way down to the lows out here that began back in 2008. October of 2008. However, there also happens to be what looks like a rising trend/channel line inside of the Australian dollar that is also at that intersection of 0.70942. And that's the spot where I think FCX, if in fact the Australian dollar does find a bottom, that's the spot where you'd want to really take a look at FCX. At least that's what this chart is telling me. If we go take a look at FCX specifically, we're going to see that yesterday it had an outside day, a key reversal session, a bullish engulfing session. It had just about everything. That says that yesterday's low, and that was the first sign. Is the Australian dollar getting ready to turn here? Who's really in charge? Is it the currency pair or is it the mining equity out here? And I would say it's the currency pair. And we'll know for sure when we take a look at yesterday's low. And that low is priced out at it's priced out at 10.10. $10.10. You are trading at 10.14. Now, yesterday's low has been tagged. It's been touched. You've been at $10 even Steven out there. But any close below 10.10 says you're going to lower price. Now, you would ask the question, well, where does that take us to? And that's an excellent question. Let's put a weekly time frame out here to see if we can find anything that might assist us with that. Again, I think you're better off, and when I look at this here, this says, well, okay, you're trading into the swing point area from back in 2008. Interesting, right? So you're already back into that December 2008 time frame. The low of that candle session is 784. The high is 1134. You are trading inside that weekly session as we speak right now. So this says the daily bullish engulfing key reversal, which is a very bullish reversal signal, is going to fail in one day. No follow through. What does no follow through mean? It means you go down to the next level of support. We already identified the next level of support inside of the Australian dollar. Now, the next level of support is a 100% move inside of Freeport-McMoRan. It says it's very likely to get down to $7.85 out there. So in the case of the mining equities, if gold has actually found a bottom out here, FCX does not need to participate in that move. It can be a slow chugger. In my opinion, what will take priority inside of FCX is going to be that Australian dollar, not what actually takes place in gold. Now, you need both in order for FCX to move higher out here, but I believe the currency pair is what rules. And so Danny in Atlanta, I hope that that helps you, at least with regard to my analysis and what I would take a look at in looking at Freeport-McMoRan. Expect it to get down to that $7 and change area, unless the cavalry decides to arrive sometime soon. You know, we were looking at the NQ before we went to the breakout there. Now, no hammer candle inside the NQ. I'm just looking at a different set of charts on my screen out here. We are seeing a little bit of a bullish engulfing session as we speak right now. But we got, 2040. We've got 20 minutes left in this session out here. But the bulls are certainly, if I'll put the Dow chart, I think the Dow is the one that gives us the best pattern. It's off 228 right now. And it's now got a little bit of a bull sash candle, similar to what it had at that 12:30 time frame. And in order for this to truly cement a bit of a bottom and a bounce out there, this is going to need to not only complete that, and that means it needs to close above as we come off at 2 p.m. It's got to close above, well, it should close above 17,327. We're looking at the future contract out here. And then some additional follow through between 2 and 2:30 during the David White show. You get that? And then you're going to take a look at the first bounce taking up to 17,377 or so out there inside of the Dow futures. So hopefully that assists you in your trading out there. Now, we took a look at the summation index. We took a look at the VIX index. We've taken what we haven't looked at here. We took a look at FCX. We didn't take a look at, let's go take a look at this, the Euro Japanese yen. Now, the Euro's Japanese yen is, when we say it's all about currency out here, it's a weekly chart. Even the weekly chart shows the area of resistance, 137.79. It's on a weekly basis. We have a shooting star candle. It's really the daily chart, though, is the one that we're going to go back to and take a look at it. That shooting star right here at 137.79. Now, I don't know where at the end of the trading day whether or not the Euro Japanese yen is going to close above that. If it does, that is bullish. Now, this is the first time that this level of resistance, which was set up by the top of that shooting star candle, has been tested. But if, in fact, the Euro Japanese yen can close above 137.79, that will say that you are above resistance, and you ought to go test the next swing points out here, which is at 141.05. Why is that important to you? Well, it's important to you because of the correlation between the Euro Japanese yen, that carry trade, that currency pair in our markets out here. To not use this or to not understand this is perhaps one of the largest injustices that you could perform on yourself. Can you perform an injustice on yourself? Yeah, you can. You absolutely can. People do it all the time. It's like people that commit suicide out there. I'm not going to get too much into that, but, they believe that they're ending their pain and the pain of others out there. The reality is they're just simply beginning the pain of many others out there. So, boy, did I go off track there or what? I think I probably did. In any event, we talked about injustice, and injustice would be not paying attention to patterns that repeat over and over again. I know that each of you that are bears, you want to get married to the trade out there with regard to the short side. And I know that if you're a bull, you want to get married to the bullish side of the trade. We just took a look at what's been going on for the past 8-9 months out there. It's basically been flatline market out here. And so you cannot get married to a gosh darn thing. Even when we come in, yesterday I laid out for you the actual trading strategy. I believe I laid out the trading strategy for the rest of the year. And as we take a look at that, we have some parameters that you and I are going to pay attention to as the market does begin to pull back. Have we seen a pullback yet? No, my goodness, we have not. What are we, 3% or so off of the highs out there? And the reality is that the New York Stock Exchange is very strong. We take a look at what's really going on underneath the covers out there. The New York Stock Exchange is strong. Now, we take a look at the divergence out here. We've got the Euro Japanese yen moving to higher ground. Every time it moves to higher ground and the ES mini and the NQ don't participate, they eventually get the message. They're just late on their memo. But once they get the memo, they go ahead and they turn around, and the choppy market will continue. And I believe that this can continue for a long time to come. And, of course, we haven't looked at this chart here for a while, but this chart here shows that divergence between the Dow transports as well as the Dow. I think I was the first one to bring this to the attention of many out there. That includes you. And we've taken a look at the divergences going back into the 1970s, and there's 4 of them. And each of them have taken a long period of time to set up. And, of course, each of those other 4 instances, the Dow had made a higher high. Well, we're beyond week 35 out there. That was the shortest time frame of a divergence before the Dow decided to participate to the downside. Week 40 doesn't come until the end of this month out here. You can see as you take a look at trend lines, price inside the Dow right up against the trend line as we speak right now. We'll see if this area holds or fails. Of course, it is important also for us to pay attention to what goes on inside the Dow transports, because should the transports find a bottom here, let me tell you, it is absolutely going to make you say, something to think about. Now, let's go back and take a look at some other things that are moving in the market. Let's go take a look at Goldilocks. Not that gold is really moving. It's up about $3.90 out here. Gold is trying to break above. If it can get above its high today, which is priced out at $11.19, that would be the exact number, $11.80 to be specific. Any close above that, and it'll be subtle oh so subtle and sweet, but that will signal that the continued move higher inside of Goldilocks is underway. If we go take a look at what's going on in some of the equities out here, if we go take a look at Rand Gold Resources, GOLD out here, what you're going to find is that it's run into resistance and it's gap down out here. This had a open window. It still has an open window, gap down from the trading day of July the 20th. That had 1.4 million shares to the downside. Yesterday, actually, that window was repaired. I take that back. You saw it close just slightly above it with light volume, 1 million shares out here. Rand Gold Resources still back below that area. Just really a retracement. Volume 681,000 shares today. Yesterday, 1 million shares. So it looks like a slight, you call it a slight pullback on light volume, but it really made a higher high today. So you'd like to see it continue pushing higher with volume, more so than yesterday, 1 million shares. It does not look like that is what is in store for Rand Gold Resources. If we take a look at Agnico Eagle, AEM out here, AEM right now trading at $23.43. What is it doing? It has not been able to repair its window. That repair job takes place at $25.06. Of course, if you can gap above that tomorrow, then you'd see one nice island bottom reversal. Speaking of islands out there, that is what Zebra Technology has done. It has created a massive island. It has stranded passengers that landed on this island on the trading day of May the 13th. So from May the 13th through yesterday, let me go ahead and turn a couple things off. You'll actually see the island a little bit better out here. Give me a moment to do that. And you can see you've got big volume to the downside today. But as we put a line across the open of that trading session from the trading day of May 13th, $98.12, you can see that today you gap down below that. This is at all-time highs. This has stranded a lot of passengers between May 13th and yesterday out there. What does that mean for this equity? Well, when you, and there's other islands, right? We took a look at the island in Apple. We'll go take a look at Apple. Right now, Zebra Technologies is cruising on down into the March 18th swing point. The high is 86.35. You're at 86.31. You're coming into it with volume, no doubt about that. That says that 82.53 is at least going to be tested out there. What's likely to occur is you've got a big volume bar out here inside Zebra that's right around the $71.74 area. And that's likely to be a spot that Zebra Technologies is targeting. I mentioned Apple, so let's go take a look at Apple. It's off about $6. Of course, Apple also has a island top reversal pattern. And prices come down to a level of support that has held. Apple has tested that level of support on light volume. Looks like this is day 2 from the light volume standpoint. Now, that price level is 112.48. That happens to be the high of the trading day of January 27th, and we saw a little gap up. That volume there was with 146 million shares. We saw price come back and test it on the trading day of August 5th with 99 million shares, a light volume test. You're in it today with even lighter volume. You're in it with 58 million shares, but it hasn't done the test. The test says you get down to 112.48, slightly below it, close back above it, do it on light volume, and you're going to have another level of support, 2 times a level of support if that happens. The third time is the charm out there. If we see 3 tests of 112.48, you'll know you have a pretty good bottom/consolidation pattern inside of Apple. This is Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's go take a look at the ETFs out here for the indices. Let's check on volume, see where price is traveling into. Well, Priceline's the one that came up. We want to take a look at the QQQ ETF series. Now, volume so far as of about 154. We've done about 23 million shares. If we just use straight line math on it, says we're going to do about 30 million shares today. Now, the previous swing point out here had 30 million shares. That was from a couple of trading sessions ago. So it's not blowing apart with volume to the downside. If we take a look at July 28, 33 million shares. So you've got a light volume pullback inside of the QQQ series ETF. Nonetheless, it needs to hold that 109.10 area. If not, it can easily head all the way back down to 107.66 to the top of that hammer candle from July 7th. But what we know so far, thus far, is volume is light. If we go take a look at the IWM, 19 million shares, almost 20 million shares so far. That puts us on pace for about a 26 million share a day. It's trading inside its most recent swing point that had 42 million shares. Not even close, not even a puff of a cigar when it comes to volume benchmarking against that August 7th swing point, let alone how about the swing point from July 28th that has 53 million shares. What do you have going on? A light volume pullback. No conviction behind this move out here. If we take a look at this SPYs, traded right into the top of a rising trend line, a little wedge. It's got a wedgie that's going on out there. 94 million shares. It's what it's straight line math. You're at 70 million right now. What is 90 million going into? It's going into 117 from August the 7th out there, and going into 173. I don't think so. Light volume on the pullback inside of the SPYs. Let's go take a look at the diamonds. The diamonds look like they do have some volume out here. So far today, they've done 4.5 million shares. That puts us in the 6 million range. Now, on August the 7th, I'll be a son of a goodness. A gun. That was volume of 6.1 million shares. So it's coming in with similar volume. And if you take a look at the trading day of July 27th, that had 5 million shares. Of course, on July 7th out there, it is trading below that level, that hammer candle, 7.7. It's the Dow that really is the one that is giving us the biggest signal of some potential problems to come. But as our good friend Lee Corso would say, he would say, hey, Steve-O, not so fast. Because if you take a look at the Dow versus the Dow Jones Utility average, what you're going to see out here, index, you're going to see a divergence. You're going to see that the utilities have been moving higher, with the Dow Jones Industrials moving lower. And I know most people just simply take a look at the transports, but why is what I say. Why, when you also have another nice correlating indicator out here, and the correlation that wins happens to be the utilities. And that says we still have another move higher. To what extent, I can't tell you, but to expect a choppy sideways move. In fact, it's probably going to get very boring for me and many of the other commentators here, because as we take a look at this 300-minute chart here for the ES Mini, we see the cone of silence. We can see how price has been traveling with inside this cone. It's starting to narrow. Wouldn't surprise me at all to see the ES Mini get down and test that bottom of that little rising trend line, maybe even tag horizontally that level of support at that 2060 level out here. But it looks like what's ahead in store for us is a narrower and narrower band of trading inside the ES Mini, and it's going to start to get less exciting. We're not going to have these 250 up days and down days, not until we get to the end of the cone of silence, which happens to be August 25th. Folks, stay tuned. Our man David White's going to be up next. It is Terrific Tuesday, and you know what that means. That means we've got Tom O'Brien and Andy Heck to take us on home. He's going to sing one of my favorite tunes by Dave Mason. So have a great Tuesday, folks, and I look forward to seeing you come Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.